Selby-Smith, Co-Chief Investment Officer, Talaria Capital. First up, Hugh, thank you very much for participating in the Inside Network's Alternative Symposium.
Delighted to be here, James. Thanks for having me.
It's a great pleasure. Hugh, with high interest rates and slowing European growth, how are you adjusting your strategy to balance dividends, capital appreciation and option premiums?
The short answer, James, is we're not adjusting our strategy at all. We've run our clients' money unchanged through a single strategy for 20 years. So we've seen a lot of vagaries in markets, regions, political backdrop and interest rate environment. So there is no change to how we're running our strategy.
Mega cap tech stocks are dominating global markets. How do you manage concentration risk while still capturing growth?
Well, our bottom-up strategy is really driven by a normalised cash returns framework. In short, what that means is that we're not prepared to pay for growth. So really the benefit that we provide to clients is that we blend very well with strategies that are prepared to pay for growth and are exposed to momentum as a factor, of which the mega cap technology stocks over the last 3 years have really been the driving cohort.
Market leadership keeps shifting, different drivers. Right now, are you leaning towards quality, momentum or value to really drive that income and growth you're looking for?
The way that I'd answer that is that we really try to have the highest quality portfolio that we can afford. So sticking to our discipline around valuation and that normalised cash returns framework. And so it's really about where the opportunities start to arise in terms of we never invest unless it's got at least a 20% discount to our best estimate of fair value. What's interesting, I think, then is what kind of comes out through the process at different moments in the stock market cycle. And there is no doubt that those companies that have the most dependable and stable cash flow profiles are starting to appear more and more regularly. That's borne up in the market indices in aggregate, where the most stable companies are currently trading at a rare discount to the market, providing good opportunities for the bottom-up stock picker.
You mentioned volatility, and today's markets are certainly that. High volatility. So how do you protect against drawdowns while keeping a steady income stream from dividends and options?
Well, there's two things there. Firstly, I would dispute the fact that volatility is high. People feel that the environment is uncertain, but in terms of the payment for uncertainty, that is in a historical context relatively low. So if you look at where the VIX is, the long-term average is higher than we're currently trading at. In terms of how do we protect, we really follow our process. I think outcomes need to come by the process rather than targeting an outcome. And our 20-year track record, in aggregate, we capture around about 30% of the downside in global equity markets. So what we're really trying to do in terms of mitigating downside is sticking to our process and executing to a high standard with discipline.
Institutional investors have very big allocations to alternatives, a lot more than retail and the wholesale market. What's your advice for advisors who are looking to replicate that institutional style approach in private wealth portfolios?
I think it starts, as always, with objectives. So there's not a single institutional profile, and of course there's not a single final client profile either. So if you think about the US endowment space, they're not in a performance derby. They're not trying to keep up in terms of the Ivy Leagues of performance. What they're really trying to target is the return profile to match their liabilities and desires with the greatest confidence interval. So lowest volatility whilst maintaining the highest absolute level of liquidity. So I would advise into the private client space that you first off think about the objective and think about the most certain way to achieve that objective whilst maintaining liquidity.
Hugh Selby-Smith, Co-Chief Investment Officer, Talaria Capital. Thank you so much for your time, Hugh.
Thanks, James.